This is first and foremost a deal that opens new investment opportunities for both China and the EU. On the European side, it opens the Chinese market and its 1.4 billion consumers to foreign investment in unprecedented ways. So EU companies will be granted greater access to rapidly expanding and highly lucrative Chinese industries like manufacturing, healthcare, financial services, and cloud computing, among others. So, for example, in the air transport space, EU firms are expected to be able to compete for ground handling contracts, selling and marketing computer reservation systems. They're also going to be able to invest in select private hospitals, things that have been limited or outright denied in the past. The deal also tackles state subsidies and forced technology transfers. Now, in return, China gains limited access into Europe's manufacturing and renewable energy market as the continent is throwing tens of billions of dollars towards a green transition. This access, though, is on a reciprocal basis, meaning the more China opens to the EU, the more the EU will open to China. But besides these tangible benefits, there are also softer benefits. This deal will further intertwine the Chinese and European economies, build partnerships and trust. China's President Xi Jinping said the deal would reinforce the international economic recovery following the coronavirus pandemic and boost confidence in globalization and free trade. This was a sentiment echoed in a tweet by Commission President Ursula von der Leyen, who said tomorrow's post-COVID world needs a strong EU-China relationship to build forward better, adding that it requires reciprocity and trust. According to EU briefings on the agreement, it contains provisions on sustainable development, climate, the environment, and labor standards. And the EU says that Beijing has committed to making continued and sustained efforts to ratify certain international labor organization conventions. One thing not included, according to EU officials, is an investment protection clause to safeguard company assets abroad. Both sides hope to continue negotiations so that one can be in place within 2 years of the signing of the deal. Wednesday's agreement was just in principle, so the next step will be to approve and ratify this deal, which could be operational as early as 2022. Tony Waterman, CGTN, Brussels.